Welcome to the new weekly outlook, everybody. So as always, we're going to go through fundamentals first and then move on to the technical analysis with Stefanos here.
What's going on, guys?
Let's start off with some macro fundamentals. So the very first thing that I want to talk about here is the talk that Ukraine president and also the Russian president are having. So obviously the fight has already started last week, and we saw the markets reacting heavily to that. And then there was also leading up to that fight, or the actual invasion that happened last week. And then after the invasion, there were talks about, hey, let's actually come to the table and let's actually talk about some of the stuff that we're actually fighting over and see if we can come to any sort of common ground. So in the middle of the fight and everything that's going on over the weekend, we also saw that a lot of different European countries and then also the US, you also have Singapore now that is stepping in and joining the crew pretty much and placing sanctions on Russia. And you also have the central banks kind of worried about it too. And so there's a central bank sanctions breach that happened. So the central bank sanctions halt Russia's currency intervention. So what's going on pretty much from that perspective is that overall, the market is still reacting to Ukraine fighting, Russia fighting, not so much to the peace aspect of Russia and Ukraine coming together and trying to talk about things, because we have already seen the situation being escalated and actually the fighting, bombing, and all that type of stuff already going on. So that's what the market is still currently reacting to. On top of that, a lot of other countries coming together and placing sanctions, which is obviously for the main purpose of hurting Russia's economy, which in turn should incentivize the Russian president to pull back from whatever steps that he is taking. So you have the central banks kicking in, you have the countries kicking in, and obviously along with gold, we have other commodities that are also seeing the effects of this, especially gas and oil and all of that as well. So we are seeing prices of gas and oil increasing. In the United States specifically, what they have suggested, or that something that they are working towards, is actually releasing more oil from their emergency reserve, similar to what they have done previously as well when OPEC, refused to produce more oil or put out more supply of oil when President Biden asked them to. But this is something that, again, we have talked about several times, that this could be a potential route that the US could go and a lot of other countries could go if prices do keep increasing. So that's some of the macro fundamentals. Pretty much a lot of other countries, central banks and all of that kind of reacting to what's happening with Ukraine and Russia. And that's what the market is focusing on from a macro fundamental perspective. Key thing is you still have COVID going on in the background. A lot of countries opening up their restrictions, easing up their restrictions, COVID restrictions, but we're not seeing too much of it in the headlines. But that is something that we should still be paying attention to, because investors will be looking at that as they start to price in everything that's happening with Russia and Ukraine.
You think these sanctions are the right move?
I think they're a start, but again, it's more of I guess you could call it like a fearful move, where the countries know, the US, for example, NATO, everybody knows that if you start going to war with Russia, what can it lead to, right? And so you start off with smaller steps, and that's pretty much the same thing that a central bank would do, right? Before increasing interest rates, what do? Quantitative easing. You take smaller steps before you go ahead and make the final.
Yeah.
Right, same exact stuff.
I definitely don't think going to war with them is the right move either. Like that's I see where the sanctions are coming from, but there's one thing that happened back in 1905 where Russia and Japan were at war, kind of very similar, right? So what happened was Teddy Roosevelt basically signed a treaty, flew over there, or they went over there, and what they did was he was basically like, all right, you two need to cut it out, or we're going to start doing things, right? And that's what they basically did. He brought them to the table. They started negotiating, and that's exactly what happened. I think that's what Biden needs to do right now, because the sanctions definitely are going to hurt Russia, but it's going to hurt the people. It's going to hurt us as well with oil and everything. But what we need to do is cut them off of oil, because we're taking 600,000 gallons of oil a day from Russia right now. So, their economy is still doing okay as far as that. And that's their main export. So like if we cut them off and we go energy independent again, that's where Russia really starts to hurt.
And a major area that depends on Russia is, again, the EU with oil, right? So yeah, pretty much that's what the purpose of these talks is supposed to be, that come to common grounds and figure out what's the issue, kind of talk it over, kind of a thing. And that's usually how it starts off. But if they're not able to find the common ground, given that this is a step that you should be taking before fighting, instead of coming in, bombing the Capitol, and killing a lot of people, and then saying like, wait, hold on, let's talk this through, or like talk this through. Not true.
Got to be way more diplomatic than this.
100%. And then that also kind of takes us into, it's about to be March, right? And we're also, what are the other things that the market is looking towards? And that's the UK and the US interest rates. Are we going to end up increasing those interest rates? So this week's data is going to be very, very important. This week is NFP on Friday. And this is going to be very, very important because this is the last NFP that you're going to get before the US Federal Reserve makes the decision of whether or not to increase interest rates. And like they have mentioned in a lot of previous situations, that all of this really depends on what's happening with inflation and what's happening with employment, which is their dual mandate: price stability, which is inflation, and then also maximum employment. So coming on to the economic calendar side, pretty easy start yesterday in Asian session, so not much going on. Today as well, we didn't really have too much happening from a macro or an economic calendar perspective with a lot of data coming out or anything like that. So it's a lot of low impact news, but no high impact or even medium impact or nothing like that. Quite easy for the most part. And then going into Asian session, you don't have much coming out here either. From Japan, the only thing is the 10-year bond auction, but the markets really don't react heavily to that. If you're trading the Australian dollar, then yeah, you want to pay attention to what's happening with the interest rates that will be coming out shortly here in about 2.5 hours. Going into London session, you have the German final manufacturing PMI coming out. You have the French final manufacturing PMI coming out. So again, I don't expect the market to react too much to that, besides the 15-minute time frame and maybe the 30-minute time frame. But other than that, higher time frame structures and levels will hold. Same thing with the GBP news coming out. So you have the money supply, you have mortgage approvals, net lending, but you should still be paying attention to them. Just because I'm saying that it's not going to be heavily reflected in the markets by price movements, you should still be paying attention to that because it paints the overall picture that the central bank looks at. You want to pay attention to what's happening with net lending to individuals, right? So it's the change in total value of new credit issued to consumers. Are consumers taking out new credit or not? And that's going to tell you a lot about what the consumer behavior is at the moment. Then going into the US session, you have nothing much as soon as the market opens up, besides from Canada, but it's not going to be impacting anything when you're looking at any US pairs or anything. But about 2 hours into market open, you have the manufacturing PMI coming out, which is a high impact news. So we want to make sure that we're maintaining above 50 for the most part, because that does indicate industry expansion. So as long as we're sitting around, let's say 56, 57, 58, or even 59, we're all good, as long as we don't drop below 50. Going into Asian session after that, so as you can see, again, not much. And then you have MPC members speaking in New York session, but going into Asian session, you have capital spending, monetary base. So again, these are things that you want to pay attention to just to understand what's the overall picture when it comes to the consumer side. But other than that, again, the market won't be really reacting much to it. Going into Wednesday, that's when things start to pick up a little bit. You're going to start getting some more data that you could use going to NFP on Friday. So you have the ADP non-farm employment change coming out, which is going to be very important. So the market will react to this, and this is setting you up to get ready for NFP on Friday. So that's something that you want to pay attention to. You have a lot of stuff going on with oil, energy, gas, all of that. So you definitely want to pay attention to the OPEC meetings, because this will also play a role into whether or not we can see higher US oil or gas, energy prices in general in the upcoming weeks. And then also you have the Bank of Canada's rate statement, overnight rate, which is interest rates coming out. So you want to pay attention to that if you're trading the Canadian dollar. Something like USD CAD, if you're trading any OPEC news or any oil news in general, if you're trading US oil, the way that a lot of people hedge that is with USD CAD. So that's something that you can pay attention to. And then you also have Fed Chair Powell's testifying. So this is a semi-annual monetary policy report before the House Financial Services Committee. So you want to pay attention to that. That's going to set you up for what can we expect to see as we're getting closer to interest rates coming out in a couple of weeks.
We'll be rolling Wednesday, right?
Yes.
Cool.
And then things will be kind of calming down after that. As you can see, not much coming out, but consumer confidence. So pay attention to, again, that, but you will already be prepared for this by the previous Asian session data that's coming out: capital spending, monetary base, all that type of stuff. Thursday, quite easy. Again, no like high impact news coming out in London session, but ton of low impact news. So the market will be reacting to this based off the 15, 30-minute timeframes. But again, nothing on higher timeframes change. And then you have the challenger job cuts preparing you for NFP. You have unemployment claims like every Thursday. You also have the revised non-farm productivity, so you can pay attention to that. Powell is testifying, so the market will be, preparing for that. And then you also have the services PMI coming out. Friday is the big day with NFP, and that's what you guys want to be paying attention to, because this is what the Federal Reserve will be watching right before they make their decision about interest rates. With that being said, Stefanos, you can go ahead and take it over.
What's going on, guys? So let me share my screen. There we go. So you guys as traders, if you guys live in the US, it is already March 1st. So we're taking a look at, and we're going to kind of go through this kind of fast. I do have a Zoom to hop on, so I apologize, but we'll be able to easily get through this. So you guys have a good idea of where price is going to be going the next few days and to finish the week for NFP. So as we're looking over here at the monthly on GJ, those of you guys that have watched our breakdowns, you guys know basically how we view the higher time frames over here. I marked off 156 over here and 149, which is that range that we've been sitting in for quite some time, for months now, since the beginning of 2021, right? So looking over here, the last breakdown that we did, we saw that price was retesting 158 and we were clearly above 156 over here, right? And what did we say? There was a good chance that we could, at that time, there were some tensions in Eastern Europe at the time. So we said that we could very well be flipping bearish and continue right back below 156 and end up rejecting 156 for the 5th month in a row, right? So we're now below 156. We have 2 previous bearish candles over here. Why is that? That's because people are pulling their money into the Japanese yen as a safe haven currency. So where's price going to go from here? You really can't tell, but we could very well be creating a top wick right here, flipping bearish and continuing down if there is further tensions, right? There are also things going on in Great Britain that they got to worry about as well, as far as their economy recovering from COVID. Looking at the weekly, we actually got kind of like a bullish big bell, right? Where that higher time frame candle, the weekly candle, opens up much higher, much lower than the previous close of the previous week over here, and it's bullish. So what do we say? If this candle closes bullish this way, we could very well be continuing up. So we'll see if we end up holding that support in this area. Let me just move this. I'm going to mark off a level right here. I believe it's 153,300. Almost had it. So that level right there, price previous resistance over here, and now we're holding a support so far in here. So we'll see if, again, this is a top wick to flip bearish and continue back below this level 153,300 and continue back down to 149 possibly. I don't know if that's going to happen, but it very well could. But we are also sitting in a key area of a previous resistance now forming as a support and the trend line since the beginning of COVID over here. So we could very well be, I'll actually make that a little bit more accurate. There you go.
We're pretty much testing structure at the moment at that 153,300 area to see if we're going to continue bullish.
I didn't get that first part that you said. What was that?
We're pretty much testing the structure here, the bullish structure at 153,300 to see if we're going to continue bullish.
100%.
And with your, the bullish candle that you're talking about with the gap down, so that could be further confirmation when you're looking at candle anatomy.
Absolutely. So looking now at the daily, now I could see why it gets a little confusing for you guys. But the last time that we were in this area, as you can see, we've been in that bullish trend. So expect a reaction to this area over here and support to be held, at least in the short term, before maybe, we could very well be continuing down from here and retesting previous structure, maybe somewhere over here, previous support, right, where we come up into here and then we continue down. There's many things that could happen, but let's see what we look like in the lower time frames before we start.
Also, one more thing is look at how similar the time or the structure is here on this time frame, right? You've had that perfect break and retest after all this consolidation, and then a nice sell-off.
100%. Yeah, all of this.
Yep.
I think that's what you actually just did, but yeah, all of this over here, that consolidation, we broke support, very similar to right over here.
Mhm.
right? And we actually called this
Mhm.
the last couple breakdowns over here, last breakdown, that we could very well be passing the high of this wick right here, right? Flipping bearish and
Mhm.
closing right below, just like that candle did. History repeats itself. So, and then we just dropped from there, right? So now we just got to see what we look like on the lower time frames. As you can see, we're easily in the range. It's very easy to break price down at this point. It gets messier as you look to the left over here. But right over here, I know price is reacting off of 154 flat. That's a very key level as well, which we can kind of just mark off like this, where price is now bouncing off of. We ended up holding support. We came right back up. We rejected this area once more, right? But now we're holding support. Now we're in this whole range over here, which we need to see if there's any moves inside of here. It's pretty choppy in here.
How big is the range?
The range it's pretty big range because we have a lot of liquidity. Yeah, it's about 100 pips right in here.
Perfect.
Right, so there is room to move, right? And we are bouncing off the support down here, right? Clean movement, right? Higher highs, higher lows on the 1 hour. This isn't the 15-minute, it's the 1 hour. So we're now coming up into an area like this, which is a key level 154,600.
Mhm.
Support, resistance here to the left. We reacted to that area as well, and now we're reacting once more. So can we break above this level, right? Or are we going to hold resistance here and end up retapping into 154 flat? Looking at the 30-minute, there's no signs of bears just yet, right? But the last time we were in this area, look at what happened. This is why it gets hard to trade in a range, because everything's 50-50. You're either up or down. You have no idea. There's not like a 70 or 80% chance price is going to form higher highs, higher lows, and retest the high. It's all just very choppy, even though it is kind of cleaner price action than what we're used to in the previous past 2 or 3 weeks now we've had on GJ. But as you guys can see, we're still respecting bullish structure over here. So I don't want to be taking any sells in this range until we break this previous support here and previous support over here. Once we start breaking here, I think you guys may have an opportunity for some sells during London. Maybe tonight. I don't think so, but maybe tonight, because you did get a very strong bullish candle over here, which we could be creating a bottom wick on and now flipping bullish. I wouldn't take anything until we break this level right here. And then maybe you could grab something in here with a 38-40 pip range. Actually, I would say that's more like a 33-32 pip range right here. It is a little choppy in here. It's a little touchy to trade. You do have a gap right over here as well. So again, keep in mind that this is not only the first day of the month, but it's NFP week, right? And NFP week, I was talking about on the live stream this morning. I have a love-hate relationship with it because it's you could have a dud of a week, and then all of a sudden NFP comes out, dud of a number, and then nothing ends up happening that entire week. Or you could have a really great week, and but most of the time it's mostly a dud, especially as of late. So these are the only moves I would say to take. I'd rather see this over here because you have a cleaner move and a bigger range, but I wouldn't be trading anything in here, right? So
Identify your ranges off like the hourly and 30-minute time frames, and then figure out what's your no. The first thing to figure out what's your no trade range, because after that, once you get out of those ranges, then everything else is just opportunity. You just have to find your setups, whatever your setups may be.
Exactly. Yeah, especially during Asian, you want to hop up to those higher time frames. You don't need to be on the lower time frames too much.
Yep.
So I have on gold over here. Our trend line that we've been respecting over here bounced off pretty hard in February. Obviously, geopolitical tensions. You guys know all the history we've broken down. If you guys want to know it, go back in the previous episodes that we've done. You'll see the entire breakdown of why these candles printed exactly the way it did. And we just got a pretty strong February candle over here, bullish candle, possible wick to fill up here. But we did reject 1910. My previous level, if you guys remember the last breakdown, my previous level was 1900, right? Obviously, very psychological number, but you'll see why I adjusted that to 1910 when we break down to the lower time frames, if you can't see it already. But we did just close right at that level. So what are we going to be doing over here? Are we going to get further tensions where price is going to continue up? Commodities are all pretty strong right now. Equities are weak. So we'll see if we get that further rally on GJ and or not GJ, but gold and retest 1975, I believe it was, that we just tapped, which we weren't at since September of 2020. Weekly ended up here, as you guys can see over here as well. You can see that 1910 level, previous support over here, resistance, and now we ended up just rejecting that. That's a very weak bullish candle over here with a tall top wick. So can we be forming a top wick over here and flip bearish where we get some, as Sharma was talking about, we get that some talks going over in Belarus. I think they're talking right now, or they're going to be talking. So if they can calm down a little bit, you'll get that rejection of 1910 and price could be coming back down to 1830, that level that gold loves so much, or maybe even back down to this level right over here. I would say,
so what that previous weekly candle tells me is that we pushed up with a ton of volume, obviously with everything happening with the invasion and everything. We come up and we tap into 1975. If you look to the left right now in the weekly time frame, all of that, we're sitting in a liquidity area, right? So that candle came all the way down, rejected all those buyers that were up there, still people putting in orders because every single second of the market, there's buyers and sellers, yet we closed out bullish at the end of the week, right? So that tells me that we still have bullish volume, but this current weekly candle, what it could end up doing because of those fundamentals of, we have talks going on, but you still have, the Russian military that's still in Ukraine and everything, posing kind of that threat. Are we going to end up coming back and tapping into this little zone? Let me see, where's the...
Want me to adjust it all?
Oh, no. Oh, yeah, a little bit to the left. There you go. So we could just end up coming back into these zones here, into these wicks and into these candles just to grab liquidity. And then you'll see maybe they could talk it over. And then maybe you see any news about even Russian military coming out of Ukraine for whatever reason, right? Or pulling back. And that could be the catalyst that brings us right back down, right? But this tells us that we left this entire range for the following candle to come fill. But again, you are sitting in a massive, the very core of that liquidity area.
100%. Yeah, something tells me that that's not going to happen anytime soon with the way Putin's been handling this right now. I mean, he said in the beginning that they weren't going to invade, and that's exactly what they did. So can't trust him too much. But right now, obviously, we're still sitting right back below 1910 over here. So we'll see if we end up rejecting that or we continue up. Now, looking at the daily, what we have is this support sitting right over here. You can really just draw this like this because we came right back down in this area with this wick over here, but I don't like doing that. And you could be moving it to the left as well. But what's most important is the previous price action, because you have all this stuff over here that you could be basing things off of. You don't really have to go to the left too much. But what we have is this huge rejection of 1975 up here, candle flip bearish and close below, right? But we ended up holding kind of like a higher low, especially with this candle right over here. We just created a possible wick to fill and a higher low over here. So are we going to hold support? This candle creates its bottom wick today, obviously March 1st. And obviously the monthly candle needs to create a bottom wick as well if we're going to continue up, or a top wick. So we'll see what that ends up being. But could we be creating that bottom wick, flipping bullish, passing 1910? I would bet that we're going to get that wick fill if there's further fear in the market.
100%.
4 hour. Trying to beat the clock here. We got 4 minutes. You have this resistance right over here. Price is just kind of ranging in here. Very, very hard price action. We ended up squeezing a nice move, about 60 pips this morning out of this. But other than that, now you got very sideways price action over here. Multiple rejections of this area. So on the higher time frames, as far as swings go, I would wait till we break 1920 over here. This is your level, because once you break out of this, we do this all the time.
Or at least, wait for a break and retest above 1910, because the last time price has faked out of these areas, there has never been a retest.
Exactly. But if you do have the clean move to the left or you could take that breakout trade, price closes above 1910, 1920, and you take this thing right back up, especially with further tensions going on. Or if we get less tensions and things start to calm down, you have a nice clean move to the left, right back down to 1850.
Yep.
Right over here. Oh, sorry. Yeah, 1950. Pretty much a clean move too. All right, so keep that in mind as far as the higher time frames go. Let's see if we have anything on the lower time frames. So as you can see, 1910 being a very strong level. Now, if you look to the left, this is something that we were looking at this morning. You have this whole level right here, multiple rejections, and then rejections of 1910, but a support held here, rejection here, support here this morning. This is actually the move that we got this morning. But right now we're still kind of sitting in this whole range right here. Right? So now we're starting to break out a little bit. And you have lower lows formed over here. Could we come back down and create an even lower low? Right? Pretty clean moves here to the left once you break that 1904, 1905 level. I would say 1905. Looking at the 30-minute, you guys might have a nice move tonight. We're sitting below all three EMAs on the 30-minute over here. So I would say wait for some sort of a break over here. If you get the retest during Asian over here, remember it's the first day of the month. So you guys want to be careful trading right now. You guys could get wicked out or could get faked out of some of these moves over here, but you do have clean moves in this area that you could possibly be taking. Right. So I would say that was a good breakdown. We're going to give you guys an update, obviously, on Wednesday when we trade live in front of you guys. So that's going to be 6:45 Eastern Standard Time for ADP. So I'm looking forward to that. Guys, have a great week. Keep disciplined, stay disciplined, and I'll see you then.
100%. If you guys have any questions, just always feel free to reach out to either of us on Instagram at SharmaFX, StefanosFX 28, right?
Yep.
All right. Awesome. So see you guys on Wednesday.
All right, guys. Have a good